What's going on, you guys? My name is Carson Rouse, and welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. So we are already nearly 2 months into 2021. It's still crazy saying that 2021. It feels like we're still in like 2014 or something. I don't know. 2021 just sounds way too futuristic for us to be living in right now. But anyway, the stock market has actually performed pretty well since the start of the year. It's beginning to calm down right now, and we've had a few short-term corrections, but overall the market's pretty bullish. But I did some research and I found 3 stocks trading at pretty good values right now that you might want to consider investing in for this upcoming month and hold on to for a few months or maybe a few years, who knows, maybe a few decades. But before we get into those 3, make sure to go down and subscribe to Business Buzz. We just surpassed 3,000 subscribers, which is so awesome. Thank you guys for that. And also, don't forget to leave a like on the video. Liking the videos is huge for us. It really helps the videos out, so it would be much appreciated. Stock number 1 is Dennys. So Dennys is a very popular diner-style restaurant chain that has over 1,700 locations across the USA, Canada, and many other countries. And I've actually ate Dennys before. It has pretty good food, and I love the atmosphere. It's a pretty nice chain restaurant. Last year at this time, their stock was trading for around $20 a share, and currently their stock is only trading for around $16 a share. But this is to be as expected, as last year their revenue was only $330 million, whereas usually it's around $600 million. Can anybody guess why? It's of course due to the coronavirus. However, the coronavirus is beginning to slow down a bit, at least when it comes to public fear and things like that. People are starting to go out more, restrictions are being lifted, and of course the vaccine is slowly being rolled out to people. Dennys is going to make up for a lot of this lost revenue and net profits. They're a good company, and you always bet in good companies during bad times because, yeah, their stock price might be low right now due to external conditions that are affecting their revenues, but eventually when things start to open back up completely and people start going out, well, they're going to be good and back where they were, and that $20 stock price is going to be a great deal. Stock number 2 is Pfizer. Pfizer might be a stock that you didn't expect to hear. In fact, they are down about 6% since the start of the year, whereas the rest of the stock market has done extremely well. Some reasons that their stock is down is due to bad press about there being some shipment delays of the Pfizer coronavirus vaccine. However, the vaccine is still in public demand and people still need it. At the start of February, the U.S. government even ordered another 100 million doses of Pfizer's vaccine, bringing the total amount ordered to 300 million. Just for reference, that's about how many people live in the USA. In their fourth quarter earnings report from last year that they released, it has shown that their sales grew 12% over the course from the year before, and specifically a segment known as the rare diseases grew 24% in sales. This is another strong, this time huge company that I think is just wrong to bet against. Instead, I would buy this stock if I were you. They're also paying a dividend right now of around 4.4%, so even if their stock remains stagnant, that's a pretty decent return. Lastly, the third stock I want to talk about is Cloudflare. Cloudflare, if you've never heard of it, is a web infrastructure and security company. They work heavily in web security, which falls under the branch of a cybersecurity company. And if you guys have watched any of my stock videos, you know that I love cybersecurity based stocks. I mean, a big percentage of my portfolio is in cybersecurity stocks. They're also diversified into other businesses like selling domain names. In fact, I actually own the domain canofcoke.com. I just know that one of these days, Coca-Cola is going to call me up and be like, hey, we really need canofcoke.com. Here's $1 million. And I'll accept. Maybe not, though. I might ask for a little more. I don't know. In 1 year, they were able to turn their yearly revenue from about $280 million to $380 million in the year. They had similar returns from the year before. They are a growing company that's flying under many people's radar. They're becoming a big moneymaker in the industry. They're also at the forefront of next-gen cloud and edge computing, and they have plenty of cash to fund their endeavors. They have about $150 million in cash and cash-like assets to fund the next steps of their business. I definitely think this stock is a buy for the long run. They're making all the right moves, they are well diversified, and they are in growing industries. Don't let it fly under your radar. I would consider investing. So for all the stocks I just mentioned, again, do your own research. Like I always say, don't just listen to some guy on the internet. Of course, do your own research, but those are my strong stocks for the month, so consider them. Anyway, thank you guys for watching this video. Make sure to subscribe, and I will see you next time.